This is Brian. Hi, everyone. Welcome to Preparing Your Future During a Pandemic. This is the second of a two-webinar series. The first webinar was hosted last week, also with Mark, our guest here tonight. And we are continuing tonight. Hopefully some of you were here last week and are again here tonight with burning questions to ask away. And this is Brian. Do make sure you have the latest updated version of Zoom so that you can have the best experience. Now, as you look at the screen now and you see a PowerPoint that says Zoom and you see our video squares, there is a small indicator there of two white lines that you can hover over and stretch the videos to adjust the size of either. Also, make sure you're not using a phone to watch tonight's webinar. Make sure you are on a computer. You should be able to hear the voice of a sign language interpreter. If not, make sure your sound is on. We also have captions offered tonight. So those of you who would like to read along with us tonight have that as well. Also, we have our CSD support team here in the background. So if you have any issues, please reach out to us in the chat box. Mark, would you like to introduce yourself? Hi, everyone. I'm glad you're here again. Thank you for joining us. Or if this is your first time attending part two, I'm glad you're here. We will be having a discussion and a conversation and sharing my thoughts about how to prepare, for example, the second wave of coronavirus that's coming, or if there's any other issue that comes up, like, for example, even a recession. And how to prepare for huge impacts like that, financially at least. So we will have that conversation as we go along through tonight and we cover the materials. Brian? This is Brian speaking. In the news, we do see that COVID-19 is still around and the numbers are increasing in some states throughout the country. Also in the European Union, they are showing their rates to be declining, while in the United States, the rates here are steadily climbing back up, which is concerning to most as to the implications and impacts on our economy in the near future. In terms of businesses reopening, in terms of folks having struggles with employment and that reopening. So we're very grateful to have Mark with us tonight so we can have that conversation. And again, I am Brian Milburn, and I'm here with the team. We have support behind the scenes from CSD Learns. And what we'll do is a question is asked in the Q&A box from the audience. I will come up on screen and I will ask that question. So please, audience members, feel free to ask a question at any time you want. At this point, I will be closing my camera so that Mark can have the floor. There you go, Mark. Thank you. And also, we want to extend our gratitude to Hands-On Banking and Wells Fargo for making tonight possible. Thanks again. Take it away, Mark. And this is Mark speaking. Thank you, Brian. Last week, I checked the news online. I'm in New Mexico, and I saw an article in the paper indicating there was a gentleman in the hospital for 3 months. And when he got his hospital bill, it came in at $1.8 million. No, I'm wrong. $1.2 million. Wow. $1.2 million on a hospital bill. A few days later, another person also received a hospital bill, and that was in the amount of $800,000. Whew. The impact financially from coronavirus has been proven that it can be tremendous. So, what does this produce? This produces fear. Fear anytime there is an emergency occurring. The fear that your daily life, your home life, your family's life can be affected. Your job, your finances, all of the above can be affected, which causes fear and worry. And when this whole thing happened, I contacted my two daughters to see if they were all right. Both daughters responded that they were okay, but they advised me in terms of an emergency. And I checked on my father. He's 90 years old. A 90-year-old person can suffer huge impacts from this. So it's not just myself, but you as a person as well. When things like this happen, the fear arises. And we start to wonder and think not of ourselves, but also other people, our relatives, our friends, and family. And anytime that we enter or are in a situation of a national emergency or a recession, then at that point, people will have fear. It will exist. What's important is how you address and challenge that fear. How you can set the fear aside. That's something that we are going to be thinking and talking about. Now, we are talking about different aspects of personal finance being affected: home life and industry. Now, let's say on a personal level, home life, maybe a person is not working, maybe they're laid off, maybe the unemployment they're receiving is not enough and it's a challenge. Maybe this person has zero in savings. And about 60% of US households have less than $400 in a savings account. So again, 60% of households have less than that, which indicates not enough people are planning financially or saving to be able to survive an emergency. That's a high percentage. Now, industry has had their impacts as well. There have been mass layoffs. If you look at the airline industries, we can just look at the numbers of people that are being laid off due to a lack of revenue. And so orders are being canceled, companies are being changed in terms of ordering airplanes. So there's a huge impact there. So there is a domino effect where one thing leads to another and another and another. So coronavirus is having impacts on industry. At the same time, it's having an impact on personal home finance. So our thinking and thoughts have to change. At this point, we need to become more and more conscious. We need to be increasingly conscious as to how we're going to handle our finances. So the last webinar, we also spoke on this issue. So moving on to the next slide. And so we are going to have a discussion tonight as to how to better prepare for your financial future. During a pandemic, of course. Next slide. When people are hit with a national crisis or an emergency, or even a recession, also let's just include depression in there as well. When that happens, people start having considerations about their money, about their finances, about whether or not they're insured enough, about whether their health insurance is covering the right amounts, about maybe their father that's in the hospital and has a need. And they start wondering, does dad have enough money? Will dad be covered? If I get the bill for a coronavirus case, do I have enough insurance? Do I have enough if something happens to my spouse? These are all areas that start being analyzed in these crises. And when people have investments as well for retirement, all that tanks in a downturn. For example, the value of my retirement plan has changed. Can I make a decision on my retirement for this summer, or do I have to postpone that retirement? Again, questions that arise. Uh, my cash flow is dwindling and the cost of food is increasing. I have to use my money to pay bills, and maybe my unemployment just isn't covering the amounts I need. So, how would I deal with this situation? I might have to improve my investments and be more cautious financially. Uh, I myself am, let's say I'm a high risk investor, maybe I need to shift my investments to moderate risk investments. So, these are all things that need to be thought about. Maybe you in the audience are thinking about starting a business right when this coronavirus hit. And financially and for other reasons, it's just not a good time to start a business at this point. Uh, Also, we've learned, fifth thing is that some folks might have to work longer. Maybe a person was thinking about retiring, maybe feeling like it's time. Maybe a person is turning 65 or more, and maybe or maybe it's a person that's 55 and thinking I'll retire early. Now, with all finances astrew and with a careful look, maybe retirement has to be postponed by 5 to 10 years, which means that a person would have to work longer to make up what has just been lost. So these are some of the things that we have learned. And there's one area that can always be reanalyzed, and that's to analyze your spending carefully and make changes. A simple way to do that is to make a note of what you need, necessary items, mortgage, utilities, groceries, items like that. Make another list to yourself of items that aren't really necessary, but they may be able to be cut, like cable TV, or maybe you can trim down your golf outings. And I apologize because I know there's probably many folks here that enjoy golfing, but that might be something that you need to cut out of your budget at the moment. Have to cut going out to movies. You might have to cut going out for dinner. You might have to start staying at home and cooking for yourself. You might have to start staying at home and entertaining yourself there instead of going out for entertainment. So you've got to make a second list of items you can cut, basically, which also means that you will want to reach out and be in touch with your mortgage as well. Reach out to your mortgage company and maybe indicate to them, hey, I've lost my job. I need a forbearance. Can I get a 3-month forbearance? Maybe that's something you can ask for. And you can even ask that from your debtors for the credit cards that you might hold. Ask them for a 3-month forbearance. There are many companies that will actually take a forbearance into consideration if historically you've been a good customer and have paid your bills on time. Then there's a good probability that something like that could work out for you. Another thing you can try is if you have credit cards, you have to ask yourself whether the balances are enough or not. Uh, so let's say you're having a tough time financially and you have to use those credit cards to buy groceries, buy necessities like pay for your insurance or pay off your internet bill, uh, and you start charging those items, then when you get your bill and you continue to pay the minimum on that, then this indicates that that's just a temporary assist. That payment on the credit card is only helping you survive this month right now. And so we've got to start changing how we think about these things. Okay.
Let's look at the next slide. Okay, ready for the answer? Okay. Well, yeah, it would be very helpful if you plan for a savings and accumulate that savings so that you're able to cover a 6-month period of your expenditures. That way, you'll have less fear because you've done your part to cover your expenses. I know a high percentage of people, a very high percentage of people, don't have more than $400 in their emergency fund. $400. Having less than $400, you really can't live off of $400 for 6 months. Many don't have a retirement savings, which means they can't withdraw money to help themselves. And so you need a better plan. You need to plan on having a savings of 6 months of expenditures. And that way, you'll have time to find another job or be able to find something else to make sure you guys are comfortable. Now, recently I shared with you a budget. So many people, hearing or deaf, don't live or have a budget. I'm in the finance industry, and my job is to develop a budget for the Deaf Institute. You have to have a budget because I need to make sure that we have enough to pay the teachers, pay the administration, the benefits, and the different expenditures and technology that we need. It's the same with your personal finances. If you don't have a budget, I encourage you to set one up so you can have a better idea of how things are going financially in your life. It's like creating a map. If you're going on vacation from point A to point B, you need to have a plan, same as a budget. Will you have enough money to cover from what you earn to what you spend? If you see that your expenditures are more than what you earn, you have to make cuts. The more you cut, the more you can save. And then you're able to build your 6 month emergency fund. So that's how it works. So, what are non essential items? Playing golf on Sunday. Maybe you disagree, but I believe, golf is not a necessity if you want to save money. Rent, buying food is more important than golf. Or you may want to go to a football game. All the LSU games. Maybe you'll have to postpone those games that you attend for another time until you get things on track. So, doing a what if analysis, you may think to yourself, what is that? If you know Excel, it's a spreadsheet software where you can list the things that you spend on and list your earnings. And you're able to total the amounts and see where you're at the end. If you're negative, you need to think of where you need to cut. Maybe it's TV. Maybe it's eating out at restaurants, sporting activities. And in that way, the total negative amount can become a positive amount for savings. So that means once you're in the positive, now you're starting to save for that 6 months emergency fund. So do a what if analysis and figure that out. I believe we have a question. Should the savings emergency fund go into a savings account in the bank, or is there another account that can accrue interest and grow more? You know, today our interest rate in a savings account is so infinitesimal. It's so minuscule. So I wouldn't necessarily say putting that in a savings to earn money when it's not a high amount of interest that you receive that, but it is there and ready if you need it. You know, if it's a 1% interest, it's not really, the interest isn't something you can live off of in an emergency. So it's not enough for you to buy a new car. That fund is for you to save for your living expenses within a 6-month period. You want to make sure you get a 6-month emergency fund in your savings to be able to be prepared for the future. When you get hit with the 6 months, I think about investing after you get your 6-month fund saved. Bonds, stocks, mutual funds. But first, you have to grow that 6-month emergency fund and pay off your credit cards and your debts and loans as soon as possible before you invest. I hope that answers your question. All right, the next one. I bet about 90% of you have health insurance. Let's see what the answer is. Ready for the answer? Oh, 83%. We didn't get to 90. So, you know, health insurance, you know, can be very expensive. Really, it costs a lot, especially when you have a family and have children. How much will it cover? $800,000 for a hospital bill? 1.2 million for a hospital bill? Suppose their insurance covers 75%. Suppose they don't have insurance to begin with and they're stuck with that. If you don't have health insurance, try to get it. The Obamacare and Marketplace, that's another option. For senior citizens or people over 65, you have access to Medicare. But Medicare doesn't cover everything. You may need to get supplemental coverage. but it pays to be healthy. It's better than having to go to the hospital for severe illness. So I really urge you to evaluate your health insurance, and that percentage that did not have health insurance, look into it and see if you can get it. Insurance is a protection. Health insurance is a protection to you. Okay, let's move on to the next slide. We have plans to talk about 5 things to cover in personal finance in this industry: insurance, investments, retirement plan, tax planning, and estate planning. Also, estate and trust planning. Now, my question to you, you could type it in the chat if you want. Have you considered changing your life insurance recently? Well, suppose you're 40 years old, you're married with 4 kids, and you have no life insurance. Again, insurance is a protection. So suppose you risk it, or you're at risk to getting COVID-19 and you pass away. How does your spouse or your partner, how do they deal with the leftover debt and expenses and food and rent if they're not working, or if they're working and not earning enough? The life insurance is protection to provide some relief. So how do you decide how much life insurance to get? Let me give you an example. Take your salary that you earn per year and times that by 7. That's how much your life insurance plan should be. You can choose between whole, term, or universal. I have a term life insurance policy that I'm comfortable with. Doesn't cost too much, and it's enough to protect my family. So I know some people are thinking, I better get life insurance for the safety and protection and planning for my family's future. If anything happens to me, I get ill with coronavirus or something happens to me, you have that protection. Next, do you have enough insurance coverage? Again, last week I mentioned I had talked with a guy and I asked, do you have life insurance? He said, oh yeah, I have it. I asked, which insurance company do you have? And he said, oh, it's some company through my work. Through your work, I said, how much is that policy in total? He said, 25,000. So I said, so you're married, you have children, you pay for the mortgage every month, your car loan every month, insurance, and if you're gone, your partner, wife, husband is going to be able to survive just on that 25,000? And he said, oh, I never thought about that.
Again, you need to analyze your situation, your insurance coverage amounts to see if you have enough. Give me a second. Okay. What else was I going to cover? In terms of the hospital bill, $800,000. Oh, wow. If you have insurance and supplemental coverage, then that might be enough to cover that entire bill. But that is a huge impact on a person's personal finances, a bill in that amount. Again, one has to reevaluate your insurance coverage, your own insurance coverages, your life insurance, health insurance, to make sure that your coverage amounts are enough. And think about what if there is another coronavirus pandemic? What if X happens? What if Y happens? What if Z happens? Will I be protected? Will I have enough to protect myself? These are questions to ask yourself. Okay, are you able to discuss the difference between term, universal, and whole life insurance? That topic I can probably talk about at length, but I would say, just for simplicity reasons, uh, there are more than just the three you mentioned. There are 5 or 6 different options, but there are two that are the most popular, and I'll talk about those two: whole and term insurance. Whole, no, let me start with term. I got a $500,000 term policy, and my monthly payment is rather low. I'm only paying for the life insurance. That's all I'm paying for at that point. I'm not investing any money. And so I make my monthly payment to that term insurance. And as I get older, the monthly price that I pay increases. Let's say, for example, it's a 30-year time period. So in those 30 years, might not need the life insurance, right? You may have paid off your house already. Your kids may have grown and moved out already at the end of those 30 years. And so maybe instead of having $500,000 coverage, you want to reduce it to $200,000 for the next 20 years, right? So that's how term insurance works. They have investment in it. For example, that $500,000 policy, you have a higher payment, and the insurance company will take part of that payment and invest that for you. Most all insurance policies include investments like that. And so that term would be 30 years. And those, you would stop making payments after those 30 years because the insurance would cover it, that time after the 30 years of your term insurance agreement, which is usually expensive. Term insurance is expensive and it's difficult to afford and start. Most people start with term and then eventually transition into whole insurance. But I've always been in term insurance because I can invest uh, the difference. So there's a high payment and a low payment, and so I invest that difference. So I hope that answered your question for now. Give me just a second. I think I see another question in the chat box. The question asks, if you are retired, will whole or permanent life insurance stop, or do you still have to pay on it? So retirement and insurance aren't conjoined. Those are two separate things. You can have a retirement at 50 years old and still have life insurance, term life insurance that covers you till you're 60 years old, or you can reduce the coverage at that point, but they're not related. They're not conjoined like that. Molly asks a question. And I'm aware that some people are invested in the stock market, but have decided to open a mutual fund and transfer the money into the mutual fund in a more diversified and safer fund, and have decided to pull money out and place it there, and have decided that when the stock market returns to have some robust movement, then they'll take the money out of the mutual funds and buy those stocks again when they're low. Now, that's one way to do it. And again, that would really depend on your situation and your stance as an investor, whether you're a high risk, aggressive investor, whether you're moderate or conservative investor. And so that's another way to look at things. Even another is to consider how close you are to retirement and have that dictate what actions you'll take. But it's important to make that assessment before you make any movement with your monies. I have a friend, a personal friend, who saw his investments drop by about 25%. And so he rather quickly pulled a lot of money out of the market and put it into a less risk fund via a mutual fund. And then once he saw the stock market was returning gains, then he sold what he had in the mutual fund and replaced that money into the stock market. So that is another option. Hopefully that answers your question. Mark, your thumbs up, okay? And this is Mark. Okay, let's go on to the next one. Again, the answer to this question depends on yourself. It depends on what type of investor you are. Are you an aggressive, high risk taking investor? Are you a moderate investor? Or are you on the other end? Are you conservative? I personally, I'm an aggressive investor. I've always been that way. I've been that way for many years. Now, my wife, she's extremely conservative. And we are folks that are close to retirement. I could shift my money to a different plan. If you notice coronavirus, or if you have a sense that something's coming and you have a sense that the market will downturn from reading articles or things you see, watching TV, and investment channels, and if you have an eye on that and you have a sense that it's time to move your monies, it'd be a smart thing to do to get in touch with your financial advisor and talk to them and ask if the timing's right. Maybe indicate that you feel economically, you feel issues are starting and that you have a sense that you need to move those monies now, and go ahead and move them. Now, for myself, I can tell you my story. My investments, when the pandemic hit, I lost just about 25% of value from my portfolio. However, since March, my portfolio has been rebounding. And at this point, it's more and beyond what it was before. So again, when I say that the stock market is a strange beast, I really mean it. It's a tough beast to figure out sometimes. So I encourage you folks to have a sit-down conversation with your or a financial advisor and get their thoughts and their opinions and their perspective on it, and see if it's time to move into a safer investment, or should you just keep your money where it's at. Another one. Susan Henderson also asks which investments I use. Okay, I won't touch Bitcoin for one. Nah, that has an incredibly high risk. And if you want to play with that type of risk, hey, be my guest. Help yourself. For myself, I'll just say no thanks. My portfolio, I think, is invested in over 50 different companies. Also in mutual funds, some in ETF, exchange trade funds. I am very, very diversified. So if a particular area of the market tanks and another goes up, then my balance will equal out and still be okay. But if you place all your eggs in one basket and go with a single company, then that's extremely risky. Again, the idea is to diversify those investments. If you're worried about the stock market, then in that case, place your money in mutual funds. It's a moderate investment, and maybe that will give you a sense of relief for the moment. I hope I've answered your question. Okay. Guess we're talking about your favorite topic at this point now, right? Taxes. Paying taxes to the IRS. Some go to the state, and then there are states that have no state taxes. There are local taxes. There are also property taxes. And there's taxes at the market for goods. There are taxes all around us. And if you were to analyze your budget, you would have the realization that a high percentage of your money, probably the highest, is paid in taxes. The IRS has been generous this year. They've extended the deadline till July 15th. Now that gives individuals more time. But if folks wait till the last minute to find out if they owe on their taxes, the IRS won't be generous at that point because they've already been generous with the 3 months that have been given now. So there are penalties and interests as one is not able to pay their taxes on time. So it's nice if we'd all be able to predict and anticipate what our expenses would be at the end of the year. Again, this can be done via Excel to figure out those costs and help you get an idea if you're going to owe in taxes this year and whether you should file a W-4 to either increase or decrease your deductions. Also, are you prepared to pay what you owe? I really hope you are. You've had 3 additional months to prepare. Moving on, will and trust. I believe that the next question coming up has to deal with that. So why don't we take care of that first, and then we'll come back to this question. Next slide, please.
Yes or no? Let's see the results. Can we have the results? Oh, wow. Oh, boy. I encourage all my clients, my friends, and people I advise to get a will. Some people say, why do I need a will? Let me give you an example. Let's say you're 30, married, have a partner, 2 or 3 kids. Let's say you pass away and you have no will. Maybe your partner and you got in a car accident. Who's going to take care of your kids? The will stipulate to the courts that your sister would be the one who could take care of them. There's a will and a probate, which is given to the court. The court can see the probate. And if it is a valid one, which takes a long time, but if you have no will and you have property, maybe you have accounts, maybe you have money in the bank, maybe you have classic cars, 1965 Mustang, first edition. Maybe your family is fighting over it. You'll be gone, but without a will, that'll cause a lot of hardship. A will tells your family where things go. That way you can keep the peace in the family as well. A trust is different. Everything belongs to the trust as if it was like a person. When a person dies, the trust takes care of all those assets. A will, what can happen is they can print your will in the newspaper and people will know what was in your will. A trust is more private. But I really encourage you to get a will. There's software that you can get to be able to create your will or go see a lawyer. Simple Will, the software Simple Will, should be simple enough to be able to get and do that if you don't have anything else. Okay, let's go to the next one. Okay, Susanna, a W-4. A W-2 is the form that you file for tax. The W-4 tells you how much you paid and how much was deducted. So how much you were paid and how much was deducted. If you file 0 on that form, they don't deduct anything. If you do another number, then it's higher. So if you file your taxes, it just will dictate how much you are putting away for your taxes. And if you don't do enough, you may have to owe taxes and you'll have to pay more. And there could be a penalty because you paid too little, less than you were supposed to. So that's what it means. A 0 stipulates a certain amount that'll be deducted out of your pay. And so the IRS holds on to that amount until tax time. And if you've overpaid, then they give you the remaining amount. So I try to break even. I try to owe a little bit and try to make the payments even so that I can take care of that amount. Play around with the software to see how much exactly will be deducted from your payroll. That way you have enough money to budget and then you don't get in trouble with the IRS. I hope that helps. Any other questions? Yes. This is Brian. Does anyone else have questions? What was the software, Adam or Mark? Yes, there's one for taxes. There's the tax cut software. Both have questions that you answer. You'll put in the numbers, you'll look at your W-4, you'll look at box 2, and you put in the information there in the software. You fill in all those answers. It will calculate the amount. So say you put on your W-4 10, then it does the math in that schedule. The IRS has that. You look at how much you earn. The box says 10. So that says, okay, I want this amount given to the IRS from every check. So it'll tell you how much you owe. So if you put 0 and you look at the salary, you put in the number 0, it'll show how much you should get at the end of the year and predict your tax every year. So 0 deductions on there. I'm ready to show you some good books. Sure. Okay. I've collected various financial books over the years, and I would encourage you to think about possibly purchasing or getting them from the library. This book has a lot of visual aids. Brian says, it looks like an easy read. Mark says, yes, this talks about all the ins and outs of personal finances. It's quite an easy book to follow. Another one I like, if you're between 20 and 30 years of age, Get a Financial Life for people in their 20s and 30s. I wish I had this back, 46 years ago. Darn it. Brian says, that looks like a good gift. And give that to someone in their 20s and 30s. That seems pretty important for their financial future. Mark says, yes, and here's another one. I got it too, Mark. Oh, that's a newer edition. Mark says it's a really easy read, easy to follow book. They have different tips, for people 20 to 30, older individuals. They have just a lot of different tips and tricks for different ages, and it's worth a read. And that way you can build your knowledge. The last book, This book talks about the future and the way it can help you prepare for the future financially. One example in this book had to do with accounting and how that's changing and how artificial intelligence is taking over a lot of those jobs of accountants. So maybe you're working that job and knowing the future is going to change for your industry. Maybe you can go back to school, learn some new trade, learn a new trade, and you can shift careers. One perfect example in here, maybe you've seen the movie with the three black women that worked for NASA. Back then, NASA would use actual people to compute numbers. And at that time, computers were coming to be, and they were very large. One of those main characters um, was replaced by one of those machines. And so she went to the library, got books on that computer, Fortune. That's the language back in my day that we had for computer programming. I've been around for a while, not too long, but and she learned that programming language, and she was able to become a supervisor for that new position, that new area, for that new computer machine, and was able to train others to do it as well. And so she prepared for the future. So this book helps you plan for the future situations. It's worth a read for those who like reading. Well, Mark, this is Brian. We have 3 minutes left. If there's any more questions from the audience. Oh, we have one. Someone's asked for a list of the books. And then the other question is, should we get a trust, and is it expensive? This is Mark. If you want, you can email me and ask for the names of those books. I'll go ahead and send you the list by email. Brian says, and for everyone's information, here's Mark's email address. Mark at finlion.com. People ask me, what's FINLION mean? That's a nickname for financial lion. It's a name that was given to me when I was in the corporate world. I was a financial lion. Brian says, now you've calmed down and now you're a lot tamer right now. Mark says, yes, I'm still, I don't play golf. I'm still in the game. Okay, I guess we're out of time, Brian. But everyone, please feel free to email me if you have any questions. Brian says, thank you, Mark. Sure appreciate you working with us today for this workshop last week and this week. I'm sure many of our participants have benefited from this. And the 700 from your book. Yes, my wife won't move from this house. We're stuck. And the 700 books in your garage. Yes, take care. Thank you, Mark. We appreciate it. And everyone, please fill out the survey and look for the email from us. And thank you, everyone, for participating today.